would be.
Sandeep, you were finishing your point about consumer durables, and if there is more money in the hands of consumers, that's the first sector which will have the cascading impact.
Yeah.
Because we have had 2 years of downturn also. So then there is a basket of stocks there. So there's companies like Crompton Consumer, there's companies like VGuard, there's companies like Voltas, there's a Havels. So I think there are a large number of companies. All of them have seen decent sell-offs because the growth has lagged behind. And I think many of them, so I think here we might see a direct impact if there is a decent tax incentive. If it's just minor tweaking, then it won't have much impact.
Okay. The bank nifty is off to a good start. Actually, it's turning out to be a very, very decent start. It's turning out to be a decent start. So Monday morning when markets will open, once today's budget reaction is over, will budget be a forgotten story? Will it be back to Donald Trump, tariffs, China, Korea, everything? Or this budget could have a prolonged impact? Like 2021 when the budget came, it had a prolonged impact for an extended period of time. It kick-started the expenditure cycle. Could this budget kickstart that for consumption stocks? That's what I'm trying to understand.
Maybe. If it is something really drastic comes from the government side and they're able to demonstrate that they are committed to revive the economy, then I think it can last longer. But if there's a disappointment, like Sandeep was also mentioning, if that is the case, then it could be just one-day event, and then you go back to the normalcy, to the global markets and the corporate developments.
But Sandeep, the global market construct, the kind of FI selling that we are seeing right now, you think that's going to take away from whatever 2025 could bring on the table for us?
So let me answer this question in a different manner. Again, linking with FIs, the current context, if I look at my vulnerability is less in India, and the way we look at global market, vulnerability is more in US. Okay, we believe good amount of complacency is there in the US market, and hence vulnerability is high. Which means, for whatever reason, if US market corrects a lot, let's say correct 15-20% sort of thing, which I'm not ruling out, then good money can also shift back to India. Okay, and again you look at if I look at the pure FI data, I think some sort of selling exhaustion is visible now. Okay, now it's very difficult to pinpoint it will happen in next 2 days or 2 weeks, but we are reaching that stage where selling exhaustion signs are visible, and hence I think there will be slowdown in the selling whatever we have seen so far in last many months.